Morning traders, Richard here doing a quick Ichimoku cloud chart market review of Bitcoin. We'll start with a really big picture. We've got the monthly Bitcoin chart up here to look where the next key support zones are in the current correction. The initial sell signal Bitcoin was around about here at the $60,000 level, and that comes off the daily chart, and then another sell signal here in the 51,000s on the weekly. So the taps then opened, Bitcoin sliced through the front cloud support zone. These levels all collapsed, and now it's testing the highs here of 2007 and Q1 of 2018, and will be interesting to see if we're going to get a rebound from these levels, or are we going to test this high here of 2019 third quarter. So these are the downside risk targets. These two highs here, that level there, that high there is 13,008, basically 14,000. And then this high is 19,000, so basically 20,000, and that high there, the open there, 16,000, so between 20 and 16,000. And these support zones here will be interesting to see if we're going to get a support rebound. If support fails, then we'll test this high there, as mentioned, the high of 14,000 basically, and then this cloud chart support levels. These are major cloud chart support zones, and that's the downside risk is to the $10,200 level. So that's the big picture view. With these are the downside risk targets on the monthly Ichimoku cloud. But what we're looking for is a short-term rebound from this cluster of support between 16,000 and 18,000. So we're looking for a potential swing trade rebound from these levels, but we are aware of the downside down to 10,200 roughly on the monthly Ichimoku. Next up, let's take a look at the weekly Ichimoku chart. Last update, we were at the top end of the cloud here and highlighting the downside risk. If the price slices through the bottom end of the cloud, it's going into bear market territory. Lots of back and forth whiplash between the bottom end support there and the top end of the cloud. Eventually, the taps opened after the third or fourth strike there at the upside resistance. And this cluster of resistance coincides well with this resistance line there at the front end of the cloud, as well as the bottom end of the cloud there. So these resistance levels held, sliced through the bottom end of the cloud, lost support at this major bottom end cloud chart support level, and the taps just opened and Bitcoin corrected, then tried to rebound from this cloud chart support level of 22,892, an old cloud chart support zone there. That came into be a new resistance zone, and now it's on its way to retest the 17,588 old rebound zone, as well as these levels between 18,351, 16,287. So these are the kind of trading ranges or support zones for it. Downside risk on the weekly is back down to this old cloud chart level of 15,023, as well as the bottom end of the cloud here at what's that level, 11,752. So these are the downside old cloud support levels. If we don't get a rebound from these levels between 18,350 and 16,287, then we'll activate 15 and 11,752 downside targets, with 10,109, which we now know comes off the monthly Ichimoku cloud. So there's a significant downside risk. Bitcoin is officially in a bear market now, since price action is below the cloud, and that from an Ichimoku cloud chart perspective is bearish. So it's very difficult to trade these rebounds from underneath the cloud, because you are trading counter trend. You can either buy the swing trade rallies or short the relief rallies that take place. So that's a scenario on the weekly Ichimoku cloud. Potential rebound zone here with resistance back up to 24,936 if the support holds, and then the front end of the cloud is another resistance zones to deal with if we get a rebound from these support levels. But do remember, you are trading counter trend, because price action below the cloud is overall bearish, and so just be aware of the risk involved. Downside risk targets 15,023 and 11,752 if support fails in this trading range. Now let's take a look at the daily Ichimoku cloud. You can see there's an initial sell signal is way up here, at 60,000 roughly, slice to the bottom of the cloud, major correction ensued, then tried to rebound, slice through the top end cloud chart resistance, stayed above the cloud for briefly for a couple of weeks, and then the sell-off resumed with another sell signal here through the bottom in the cloud there. Bearish outlook, and you can see there's always these little rebound trades from support back up to the bottom in the cloud, from support back up to the bottom in the cloud, and now we're at looking for support rebound trade and then back up to the bottom end of the cloud. So it will be interesting to see if we're going to get 831 or 17588 as a potential rebound zone, or is it going to dip down in a volatile session to 16287 and then rally back up to the bottom end of the cloud. So that's kind of the strategy on the daily, is looking for these swing trades or rebounds from these cloud chart levels back up to the bottom end of the cloud. So it will be interesting to see if we're going to get that on the daily, for example. Turning to the 4-hour Ichimoku cloud, I can see here how the bottom end of the cloud remain a resistance zone. It's been struggling to get past that. You can see here since the last sell signal through the bottom end of the cloud, yeah, it corrects, sells off violently, well, very volatile session, then tries to grind back only to be met with resistance at the bottom end of the cloud. So it's still stuck in a downtrend. 4 hour is still bearish. To be bullish, it needs to be back above the top end of the cloud. So it needs to be so it's bearish on 4 hour with these downside targets, risk targets, 18,351 and 17,588 as potential rebound zones for swing trades. But do remember, the price action on the 4 hour is bearish since price action is below the cloud. The price action on the daily is also bearish because price action is below the cloud. The price action on the weekly is also bearish because price action is below the cloud. But what we're really looking for is a potential short-term relief rally rebound from these old cloud chart support levels. Until next time, happy cloud chart trading. Bye for now.